All right, good afternoon, everybody. You guys can hear me. That's great. I hope the YouTube works. I'm on a new computer. Our fabulous tech team, if they're still here. Yeah. Yes, they are. Helped me to get a whole new computer set up here today at the office. So after all the problems and troubles the last couple of days, I'm hoping things work today. 1080p streaming. You're already talking outside my skill set. But if someone could just drop into the YouTube and just make sure it sounds right and it works. I'm on 720p. Haraka,
yeah.
How do I upgrade to 1080p from 720p?
That's the next thing we're doing after this presentation.
They tell me that's coming up next. So, we'll see. Looks good. Awesome. Exciting. New computer. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same, except I got out of Reddit today. I no longer have a position in Reddit. All right, and I did size down on some of these positions that went up. I sized down on that TNA quite a bit into the up move today. Man, I am much less stressed today than I was these last couple of trading sessions, just because the movement of the market made a little bit more sense today, even if it was tricky. Ooh, I can turn my video camera on the YouTube. I'll do that right now. Bam. Got a haircut and a shave yesterday. So I'm looking a little cleaner than I did. Idaho Derrick is gone. Wall Street Derrick is back. I got a shave at the barber office yesterday. Barber office? Barber... What do they call it? What do you call it? Barber shop? It's the first time I've ever done that. It was kind of nice, man. It was pretty relaxing. Oh, Josh is here.
Out of the camera.
Why?
Oh, okay. I don't know.
Are you not allowed to drink beers in the camera?
I don't know. I don't know what protocol is.
Josh just gave me a what's this, a Goose Island?
Goose Island. Cheers.
Goose Island IPA. Thanks, Josh.
Yep.
The donuts were great. I had never heard of these duck donuts before, but they were really good. Unfortunately, I ate 3 or 4 of them. The other people around the office did not pull their weight. Billy, did you ever get your bacon donut?
Half a bacon donut.
Half a bacon donut for William Jones. He's excited about it. He was really pumped. Mr. William Jones does the intermittent fasting, so he doesn't eat till 2 o'clock. But he was eyeballing this bacon donut all day. And if somebody ate that bacon donut before he got to it, I think there would have been violence. There would have been violence at the office. All right, enough fooling around. Let's jump in. Let's talk about this market. Thank you, Judy. The S&P finished up 1.15%. The Qs closed up 2%, and the IWM closed up 1.5%. We still had relative strength from the Nasdaq today. The TLT is up 0.7% or so, so interest rates are down again. It's been a really big move lower in interest rates in a short period of time. I would assume that this is the fastest move lower in interest rates this entire year, and it was a pretty quick move actually. I'm seeing at the end of January, higher in the TLT, but it's up there. It's been a really big, fast move lower in interest rates. So again, that should be supportive of markets. It should be supportive of growth, tech, long duration, the stuff that we've been saying. And today, the market actually cooperated a little bit. So, you know, I'm always pretty brutally honest. Sometimes I'm too honest. When I'm frustrated, I kind of wear my emotions on my sleeve. And when I'm happier, you probably can see that a little bit also. So I was really frustrated the last couple trading sessions with the relative weakness on the IWM and some of these growth stocks that just didn't make any sense to me with the move lower in interest rates. Today, finally, the market made a little bit more logical sense. So we got the S&P and the Nasdaq at all-time highs. So congratulations to bulls. We literally just said on Friday that Friday looks like it's going to be the pivot low, that higher low in the uptrend. It needs to be confirmed by a new high. Well, here we are at the S&P. We are confirming a new high. We have now fully negated the day to take notice of. That Thursday, May 23rd, was a really important day. It was a big feather in the hat of bears, and we likened it from a technical perspective. Again, I'm just reviewing this, to April 15th, to April 4th, and to this big day here, July 27th. July 27th led to a 10% plus correction in the market. The April days, that first April day, April 4th, led to a 5% plus correction in the market. This, I don't know what this is on a percentage basis, especially if you only do closing prices, but it's definitely not even a 5% correction in the S&P, which was our expectation, right? We took note of this day. It was a day to take notice of. It was a breakout failure. It was a bearish engulfing candlestick, but the sentiment and positioning data were not as supportive of a bigger pullback this time around as they were in April and July. So I wasn't expecting a big pullback. I even thought that when we had the inside day on Friday, May 24th, there was a possibility that we could just get an inside and up that very quickly negated it. That wasn't true. We did get a little bit of a deeper pullback, but still, you know, from highs to lows is probably just a few percentage points. I mean, we pulled back from an absolute high, not even closing, from like 533 down to 518 and change, much less than that on a closing basis. And we got our pivot low last Friday. Last Friday was a very key, important technical trading session, a weak morning, a strong afternoon, and now we worked our way higher. The price action I would describe, compared to the news and the economic numbers that were coming out on Friday, on Monday, and on yesterday, were both kind of frustrating to me. You know, it started on Friday when we had the PCE. The market shot higher on the inflation number pre-market, and then rolled all the way down to break that 8:30 a.m. low, make new lows before we got a V bottom at like 12:15 in the afternoon that brought us back up to highs. Then on Monday we had that ISM PMI number hit, which, you know, showed a degree of an economic slowdown. But what we have consistently seen in this market environment is that bad economic news gets positively interpreted by risk assets because of a higher probability of Fed rate cuts. Well, we saw on Monday's number, and then again on Tuesday's number, when we had the JOLTS number, both of those seem to indicate a little bit of an economic slowdown. But we're in an environment right now, again, where an economic slowdown actually should be bullish for stocks, because it means there's a higher probability of a cut. And what did we see? We saw the Fed funds futures price in a higher probability of cuts. We saw interest rates go down. We saw the TLT go up. Yet the market didn't really give us like a great reaction on either day. On Monday, we once again had like a V bottom where we were weak in the beginning of the day. We did not initially digest that number in a bullish way when it hit. I think that was one of the 9:45 a.m. numbers. Could have been 10 a.m. I think it was 9:45. Where the market sold off in the first half of the day and then rounded up. And then yesterday was the same thing. That JOLTS number indicates that, you know, there's less job openings out there, and that should be especially bullish for the market. Yeah, we had an inside day, and we kind of had some immediate weakness when that JOLTS number hit. We couldn't uptick for anything when that number hit. Even when the TLT is continuing higher over the course of these last couple of days, we're not upticking. And again, the IWM, which is really where you would expect to see relative strength, is not participating at all. So last 3 days a little bit tricky. You know, you maybe can attribute some of that to like end of the month flows from last Friday or whatever. But it just made for some price action that I kind of thought was somewhat illogical. And that's especially true with the IWM weakness. And again, look, this is a broad index that covers 2,000 mid caps and small caps. So you could be overly influenced by like KRE, by like the the smaller banks, if there's concern on a renewed banking crisis where maybe you don't see the actual index perform, or energy, if oil is getting hit but interest rates are improving, there's a lot of energy companies in the IWM, so that could help hold the IWM down as well. But even if you looked at most growth stocks, they didn't really seem to participate. The exception was the XBI. The biotech ETF 2 trading sessions ago was on fire on Monday, gave a nice inside day yesterday. One of the ideas that we discussed in the morning meeting, it wasn't my idea, one of you guys brought it up, but I really liked it, was the inside and up for XBI for continuation, which is exactly what should happen if interest rates are moving lower. So that trade actually worked out great. But so you fast forward through my frustrations of the last couple trading sessions, and you get to today. And once again, we're having a nice gap up this morning. Really nice gap up this morning. But what do we have to do when you're dealing with these larger gaps? You have to be a little bit patient. Because first of all, gap ups have been very consistently sold. We've seen very consistent opening weakness, but also, let the market prove itself to you by digesting that gap through time or through price. Let the ADMA on the 5-minute catch up, so then you don't have that extension and you can potentially get more of a real move as opposed to just a pure momentum move. So, the SPY is held in pretty well here for the first 30 minutes or so. Pretty much going sideways, bull flag and ADMA caught up. I think we even said you could be long off the 9:50 a.m. low as the ADMA caught up to that low for trend continuation. But maybe take the trade a little easy and don't go max risk, because we've got a really big 10 a.m. number coming out. So the
I think I dialed the wrong number, but sorry.
The 10 a.m. number comes out and it leads to this quick downtick. But the IWM, again, just to further add to initial frustrations this morning, look at the relative weakness in the Russell compared to the Q's basically bull flagging in the first half of the day, first 30 minutes, and the SPY's basically bull flagging for the first 30 minutes. The Russell, and what does the RSP look like? And the RSP look like crap again. The average stock that's out there is not performing in the first 30 minutes. It's Nvidia, it's AMD, those stocks are moving higher, everything else is selling off, so therefore the SPYs and Qs are able to go sideways, but the IWM and the RSP, the equal-weighted S&P, are actually selling down. 10 a.m. number hits. I don't know if Pat, if you're available, or if anybody can just repost the number real quick. But the numbers looked Goldilocks to me, because it indicated actually economic expansion, but the prices paid number was a miss. So to me that seemed like literally perfect. If the concern on Monday and on Tuesday, when we had those numbers miss, was that we're getting an economic slowdown, and that's why the average stock of the market didn't want to participate. If that was the concern, which doesn't make sense to me, but I could see the argument, like, oh, the economy is getting worse, so therefore the market's not performing as well, the average stock's not performing as well. If that was the concern based off the numbers that came on Monday and on Tuesday, this showed economic expansion again on a beat, and at the same time as that, the prices paid number was down. So you've got now, it's perfect. You've got a number that shows that the economy is continuing to hum along, but that inflation can actually move lower. So I'm looking at this number and I'm like, oh, this is perfect. Let's see what the TLT can do. Let's see what the market can do. Let's see if the IWM can play some catch up. And look at the initial reaction. Initial reaction, quick tail down that then rolls back up. But then the candle after that is also a weak candle. So saying on the 10:05 candle, like, I just don't understand. This number seems great, but sometimes you get a lot of volatility when the number first hits, so let's just watch it. I don't like that we're below the starting point, but we are still below the low of the tail, so let's watch the low of the tail. The SPYs managed to hold the low of the tail. They ended up rounding up. They ended up getting above 530, which is the number that we needed it to get above, and then the rest is history. We trended higher all day. The IWM, which was relatively weak off the open, actually ticked negative real quickly on that number. Also gave a big downside tail. Concerned me at the 10:05 candle, but then after 15-20 minutes here, broke higher and actually went and trended higher all day, and was also fantastic. And the Qs are pretty much the exact same thing. So that low was never violated, and eventually we broke up and we went. And for me, it was just a real relief of some frustration from the last couple trading sessions, because finally I'm looking at a move in the market that makes logical sense. I don't know. Trading is such a difficult business because on the one hand, I always want to make room from a risk perspective and in how I manage risk that I will be wrong. I've been trading long enough to know that if you think that you're always going to be right with your ideas and your trades and everything else, that the market will humble you and that you got to manage risk because you are going to be wrong. At the same time, I do feel that most of the time there is some logic behind the market is if you're able to dive deep enough and you're able to do the research and you're able to have your finger on the pulse of the market and really understand what's going on. And the last couple of trading sessions to me were just a complete conundrum. Sure, there were still some opportunities out there with a couple of strong stocks, Apple on its breakout, Nvidia on its continuation. We called along for Nvidia just a few days ago. There were still some trades out there in some individual stocks, but the market itself, I just didn't understand. Why is the IWM so relatively weak when the TLT is ripping up? Like the IWM, I still think that the IWM is underpriced compared to where it should be based on the move in interest rates that we've seen. I still think that we should be almost at probably we should definitely be above 208. We should probably be at 210 or 212 at this point. But, the market's always right. The market's always right. And that's why it's so important to manage risk. But it was a real, struggle for me personally with this IWM trade that I had on for a few days here via the TNA, where luckily, I took a bunch of my position off on Monday into the close just because it seemed like I was wrong, but I wanted to manage it. I was honestly a little bit stubborn, and then finally I got some relief today that was able to get me back to being, fully profitable in the name, and took some extra stock off as a result of just kind of my game plan and everything else. But it's really where we're at from an index perspective. And if you look at the markets right now, the S&P looks phenomenal. So watch the extension. Right now we've got $5 of extension. And the ADMA will be higher tomorrow. So we're not even in no man's land yet. This market's not very extended at this point. There's a lot of room for the market to continue. There's room for the SPYs even tomorrow or by the end of the week, especially if the ECB situation, the cuts come in and the jobs number on Friday is good. We're not going to be extended unless we're getting to 538, 540 tomorrow, up in that range. Probably more like 540. So there's plenty of room for these SPYs to go. The Qs here have a bit more of extension. Eyeballing it, it looks like about $8 of extension in the Qs. Again, the ADMA will catch up a little bit tomorrow. So if the Qs get up to 466 tomorrow, which they easily could, then they're going to start to kind of come into that extreme extension on the upside. But all the same, the SPYs and the Qs look fantastic. The IWM still doesn't look great. This was a good day. It was a good little relief bounce. I needed it, honestly. It helped me to be able to kind of manage some risk a bit better on my positions and take down some sizing on a couple of things. This IWM's got to get above 208 to look good. And like we've remarked a few times in the past, you don't need the Russell to lead a bull market. You do need the Russell to participate in a bull market. And this IWM is still not confirming that. It's the SPYs, it's the Qs. The IWM is still kind of a neutral territory here. It was almost getting into bearish territory again at yesterday's close, but it's still kind of a neutral territory, and you need the Russell to be able to participate. So that's kind of where we're at from an index perspective. For myself, I just have a lot of risk on right now, so I felt like I really needed to primarily just focus on managing what I already had open. I did just barely miss a trade in snow at lows, which I'm upset about, but I wasn't trying to be super aggressive for the reasons I just described. I tried to come in and scoop some 129 here. Put a bid in at 129.01. I was a little bit slow to get the bid in, and it moved 15 cents away from me. Still thought maybe I could get on a quick downtick. I didn't. That was after this candle here, when I noted that there was a change in character in how the stock was trading, and then it really broke up and worked higher, and was very nice. So we'll see. Some of these names are still destroyed. This snow is destroyed. The price here is kind of crazy to me. I mean, look at this Unity still. What are we, 15 days in a row without a touch of the 80 MA with barely a green candle on here? Just heavy, steady selling. IWM is moving higher. Interest rates should be supportive of the stock. I think there's value here at this, $17, $18 area. This thing cannot catch an uptick for anything. So there's still some garbage out there, by all means. There's still some names that finished red, but not NVIDIA. This NVIDIA is getting extended, but it's not so extended it still can't continue from here. I think it is possible. If the Qs want to extend, which they could, if the Qs want to extend to, $10 of extension, which tomorrow would probably be like the 466 spot, it's probably with NVIDIA getting to 1275, 1300. Could easily see NVIDIA at those prices. So if you're
NVIDIA
short,
goes to 1300, you will no longer see Josh. I will jump off a fucking bridge.
So if you're short, please make sure that you're managing your risk as opposed to jumping off a bridge. That's all I got. I am happy to answer any questions you guys may have.
Could just as easily go to 1175.
Yeah, but why? It's not extended enough yet. I mean, it's too extended to buy, in my opinion, but there's enough momentum here and strength and insanity that I don't think it's extended enough to come in on the other side yet for NVIDIA or the semiconductors. Yeah, so happy to answer any questions that anybody may have. Starting with Blaine, would you go after TNA more aggressively because now it should catch up to the Qs and SPYs? The catch-up trade is something that you got to be very careful on. From my experience, it's a trade that I've always kind of struggled with. Logically, it makes sense. Like everything else is going, let's get some rotation into some other stuff. And you do see that sometimes, where in like a really strong bull market, and we've seen this in the past, they like pass the baton back and forth. You get the Qs to get to $10 of extension, so it's extreme extension. And then they go sideways. They don't even pull back. They go sideways. So that gives a time correction that satisfies that extension. But while they're going sideways, the money's rotating into what lagged. It's running into the IWM, into the TNA. That certainly happens sometimes in really strong bull markets, and it could happen again here. The flip side is, as often as I've seen that occur, it's probably even more often that relative weakness is relative weakness for a reason. And the problem is, like, yeah, you could get a catch-up trade, but what if the Qs and the SPYs were to top out? There's no indication that were to happen and pull back. Then the IWM, which is what's already been relatively weak, probably pulls back most. So I don't think it's necessarily that you necessarily need to see that catch-up trade. I think that you just let the technicals guide you. You do see rotation from time to time. And I've been looking for the IWM to... I mean, you could probably take a look at a chart. Uvixi Bull probably has it. You could probably take a look at a chart of the IWM versus the Qs, or the Qs versus the IWM, like an overlay chart. I know some of you guys have had it and shown it in the past. And you will just see massive, consistent underperformance from the IWM that probably goes back a year and a half. So it doesn't have to happen. It could happen, but it doesn't have to happen. From Bakas, it seems impossible to position properly. Yesterday, everything is breaking and you need to be cautious. In one day, everything is approaching extension and the danger is being too late. Too extended to start some positions. How to balance the opposing forces in such a situation. It can cause a great deal of frustration. So the first thing I would say is that I would agree with you. I mentioned it in yesterday's afternoon meeting. Monday and Tuesday of this week had me extremely frustrated. I lost money on Monday and Tuesday. I think I made more today than I lost in both of those days combined. But I lost money on Monday and Tuesday. And, I was extremely frustrated. Not because I didn't lose a lot. I didn't have massive down days. They were negative days, but they weren't huge down days. They weren't enough where the P&L itself would frustrate me. I was frustrated by the market. The market these last couple of days I found to be extraordinarily tricky. kind of more tricky than I remember in a while, and like I keep saying, it just didn't make sense. It just didn't make sense. That IWM, when it gapped up above 208 on Monday, it should have rested for 30 minutes, an hour, maybe even the first half of the day, and then ripped higher and closed on highs. And it didn't. It did the opposite. It sold off. It broke down. And then yesterday it closed on lows. It was just a couple, brutal sessions for me from a logic perspective and from a trading execution perspective as a result, because I want to be involved in what we have historically seen when we get these types of moves is strong. And it's just not what happened. It did not participate. But the bottom line is you have to manage your risk, but you also have to make sure that you're actually trading your setups. And that's always the biggest thing. Make sure that when you're getting involved in a position that you have a legitimate trading setup that's getting you involved in that position. You hear me say it all the time. I look at stocks and charts that I like. I could look at NVIDIA right now. I could look at Apple right now. I like some of these names, but there's no setup. Apple's been super relatively strong. We called out a breakout a couple days ago for 193. It worked okay. The execution was a little bit tricky. But after that, after it went, then there's no setup. Stocks need to reset up, and that's how trading works. It's one thing to have an idea. I have an idea that XYZ should move higher or lower or whatever. It's something else to actually find a trade. A trade is something that has an executable setup. A trade is something that has a technical reason on how and why you can enter, and has a technical stop loss on where and how you know that you're wrong and how you can manage your risk. And if you don't have the trade, then you don't get in. And if you do have the trade, then you do get in. And the beautiful thing about the market, or markets in general, is that there are opportunity creating mechanisms. And that's something that we, I talk about this sometimes. It's a really important concept, and it's very hard for us as traders, right? As traders, we are, watching the market tick by tick. We're watching our P&L tick by tick. We're frustrated in the moment when a trade, that's a good idea stops us out. We're happy in the moment when a trade that's a good idea, works for us. But you got to take a step back and be big picture, and you got to be big picture and an understanding of what actually makes you money in the business, which is finding good executable trades and taking them consistently over time and having a good risk reward and probability of success on them. But you also have to be patient insofar as letting your setups come to you. If you force a trade because of a setup that's not actually there, and you're just forcing the idea upon the market, you're really not setting yourself up for success. So the thing that you want to remember is that markets are inherently an opportunity creating mechanism. You don't need to be in every trading opportunity that there is in this moment. You don't need to be in every trade that there is tomorrow. You don't need to be in every trade that is there yesterday. And in fact, if you have the mentality of, oh man, I can't miss a trade, I can't miss a market move, you'll end up forcing things when they're not there. So if you're in a situation where you're looking at the market and you're like, it just didn't give me my setup and the trade went without me and now it's extended. Well, it just is what it is, and you just need to be patient and remember that the market's an opportunity creating mechanism, and maybe this time around there was a big market move without a really good setup, but there will be in the future good moves that are preceded by really good actual executable setups with good risk reward, and that's what you need to be involved in order to be able to make money consistently over time. So appreciate the question and the commentary there, Vikas. That's right. Popping over to the YouTube, we've got a bunch of comments in here from Robert. Going back to Monday, how do you make your thesis for the market and the SPY and the TLT on Monday? The TLT is strong to the upside, which means rates are going down. It's supposed to be a good market environment. For Qs and growth, how do you implement that to your plans? Do you also think that Monday the TLT could predict the market move for the following days, meaning possibly today? Sure. So yeah, I know the people on the YouTube, I wasn't able to properly stream the last couple of days. Apologies about that, but we got a new computer set up here. Yeah, I mean, what you're talking about is what I've spent the last 3 days complaining about, to be honest, is that it was difficult and tricky. As you're saying your question, though, I'm reminded by something that Pat said about a week or so ago about how sometimes you get that TLT move. I think it was actually when the TLT broke lower. I think it was on this day, maybe here. Maybe it was the 28th. I think the TLT broke lower, but maybe the market itself didn't. Yeah. And I remember Pat saying, like, ooh, this TLT move is no good today, but maybe the market actually wakes up to the higher interest rates tomorrow when Europe and Asia have the time to actually digest it a little bit. And he was 100% correct. The TLT broke down hard on the 28th, but the market itself didn't really break down on the 28th. It actually closed well. But then the next day it gapped down and it was weak, and then it worked lower the next day. So there absolutely can be a lag effect. There can be a delay. It's not as simple as in the last 30 seconds interest rates went lower, therefore the market should be ripping higher. The market's certainly more dynamic than that. Though, of course, Ryan in the VTF here, if he's listening, also posted a good chart during our morning meeting this morning, which traders can scroll up and take a look at, that actually showed the correlation between interest rates and the Russell, and confirmed the thesis that we're talking about, that this move just doesn't make any sense these last couple of days where the relative weakness has been. So appreciate the commentary, Robert. Hope that helps. From Gabriel, what a crazy past couple of days. Finally, at the IWM, notice that the Fed will need to cut sooner rather than later. Now, please, let's have NVIDIA take a break and get some money to rotate. I would love that. I would love for some money to rotate a little bit out of NVIDIA. Thanks for reposting that there, Ryan. But I don't think that NVIDIA is like it's getting a little bit expensive. I don't think it's like extremely expensive. I do think that there is room for NVIDIA to move higher, but there's only so much money out there. So I would love for NVIDIA to take a break, and it easily could happen. I actually think that we need a little bit more extension. I think with a little bit more extension, the Qs and NVIDIA can take a break, and if we want to have a really strong bull market, it goes back to what Blaine was just questioning in the VTF, then actually maybe we get the rotation and the catch up. But we'll see. From Uvixi Bull, big picture question. The SPY is now 12.83% positive year to date after a monster rally last year as well. And we are only in June. How do you reconcile historic return averages with the bullish technical picture? Sure. So it's a great question. I like these big picture questions. So one of the things that has fascinated me that I've learned some years ago now about historic average returns for the market. The average return or whatever is like 8%. Have a look back at the last 30 years at how often we've had an average year. It's actually very rare. It's not like the average return for the market is 8%. So this year we're up 10%, and next year we're up 6%, and next year we're up 8%, and maybe we have a bad year where we're up 2%, and a good year where we're up 12%. It's not like that at all. It's data points all over the place of 23% down on the year, 31% up on the year. Guess what? That actually hits home on your average return. But that's actually usually what it looks like. So, the flip side to, I think, the gist of your question here, which is, hey, we're only in June, the market typically only goes up 8% and we're up 13%. The flip side of that is there's also a lot of data that supports that when you're up, I think, 10% plus in the first half of the year, the second half of the year is positive in like almost every instance. You get add-ons on those gains, and I think like almost every instance in history, going back to like 1900. I think that there might be 2 times where we had negative years, and a negative second half of the year where we're up 10% plus in the first half. And one of them was like negative 0.01%. And one of them was like 1987 or something like that, where we had like a bigger real weaker second half of the year. So, yeah, on the one hand, you know, it's a strong first half of the year compared to like the historical average, but again, that historical average is because the market is all over the place on a year-to-year basis on what the return itself actually is, which also, by the way, is what creates opportunity. And historically, if we just want to actually look at historical data, when your first half of the year is 10% plus, typically your second half of the year is actually also very strong. I would assume that the average return on a year where the first half is 10% is actually 20% or more. You probably even tend to have even more better performance in the second half of the year than the first half of the year. Don't know those numbers specifically. Kind of an educated guess. Yeah, Tate here mentioning that he's seen data where NVIDIA is responsible for half of the S&P up move this year. That makes sense also. I mean, there's so many possibilities on how this could play out. What if NVIDIA takes a break and the whole rest of the market actually decides it wants it to have a good year? You know? And by break, I don't mean pull back. I mean, what if it just goes sideways for most of the rest of the year, holds in, and everything else gets rotation and wakes up and goes? I mean, and another thing I would keep in mind, I do think this is very important, is that pretty much as of now, starting with Canada today, we look like we're heading into a global easing cycle. We haven't had that. We've had a global tightening cycle for a little while here. I know that there's been easing coming from other places to make up for like what the Fed has been doing as far as interest rates go. You know, the U.S. government certainly hasn't stopped spending. But they're not going to stop either. And on top of that, Canada's going to cut, Europe is going to cut, China's trying to ease, and the United States will, you know, the United States will probably get on that when the bases are loaded, and see if they can drive everybody else home with their cuts, which will probably start in September. So, yeah. That's the bull side. And the technicals are bullish as all hell, which we also need to remember. Thanks, Brian. I'm usually not too good at sport metaphors because I don't really follow many sports except for fighting. So, you know, pulling the baseball one out, that was tough for me. There's ducks in the pond. I don't know that one. You already lost me. From Gabriel, today I made my best trade in my career. LFG. Can't say that one out loud. I bought SG at 31.50. Wow. Beautiful breakout. Great job. Great job. From Gabriel, check out ENPH. This ENPH looks really good. I like this pattern when you have these big consolidations and then you're getting a upper level consolidation within the bigger consolidation. Like a bullish consolidation within the bigger consolidation to set up the breakout. I like it a lot. It's interest rate sensitive, a fast mover. Yeah, it's not extended at all. This is worth having on the radar for like the 134 area, I think, for tomorrow. So thank you, Gabriel. From Kevin G, that was the confusion from Friday versus Monday. Friday PMI missed by 5 points. Monday's PMI beat by 0.5%. By 0.5 points, and both were sell-offs. So it was very frustrating. Yeah, I agree. I struggle to reconcile, you know, some of these economic numbers myself these last few days. Thanks, Uvixi Bull. Just emailed me. Hope you don't mind if I just share this. It shows your email address in there. I don't think that you do. Yeah, so here is that correlation chart of the Russell versus the NASDAQ. And you can just see how this thing has gotten wrecked lower. Thank you for sending that. All right. Looks like we got through everything in So we got through everything in YouTube and the VTF. Anybody else have any other questions, or shall we wrap it up for the day?
I've decided 1250 is my app.
Will you get out after hours?
I mean,
If
if we
it
open
gets to
above
12:50.
I'll probably short more, but like 12:50 is where I'm drawing the line.
Okay.
I'll take a hit.
You can always get out and reassess it when it sets up, because they could squeeze this thing another $100
Right, that's
higher.
what I'm saying. So like, if we bust through 12:50, I'll probably take the loss. Right, and then I'm gonna smack this kid next to me that came in. first
He's.
thing,
I mean,
lost the money.
interns are meant to be
Kiss of
abused,
death.
so.
Kiss of
They
death.
double his punching bags.
Came in, fucking lost it.
Except for Derrick, because he could probably beat the shit out of him.
Yeah, if Pat shorts in the video.
Patch was the
That's
video,
that's
I'm
the
probably-
signal.
I'm quadrupling up.
Oh man. Do you mind addressing my options question above? Sorry, Kevin, I missed it. Welcome back. I thought the crypto scammers got a hold of your computer. No, I'm back in New York. New York's a mess. Anyway, do you trade options? A little bit. Giving you trade indexes, I'll take them in futures, but I'm thinking about options. Yeah, so I am probably 95% equities, 5% options at this point. Maybe even less than 5% options, to be honest. I'm not an options expert. I know a little bit, obviously, but I've never really had too much of a need to trade options because I'm a prop trader, and I'm also primarily like a directional trader. So, the number one reason when I speak to someone who's in the retail world and they trade options, it's because the natural leverage that they can get from an options contract that they can't get by trading the common stock. So it helps them a little bit with the Reg T margin rules that are very limiting. In my opinion, probably too limiting. On the prop side of the business, I basically can have access to all the leverage, all the buying power that I could ever want. For T3 prop traders on the equity side, we usually start by giving them 20x for intraday trading and 8x for overnight positions. For some people, it's significantly more than that. Don't always advise using that all the time, but we have access to it. So my thought process has always been, as a directional trader, why do I want to trade options and deal with time decay when I could just trade the equity and get the same bang for my buck, and also the equity market's significantly more liquid. So I'm paying tighter spreads, it's a less liquid market, I can take more sizing, it creates more game plan flexibility, and I don't have to deal with decay. So I don't do a ton with options really for that reason. So, you might want to be willing to look at the prop side of the business. You can reach out to me if it interests you. I do dabble a little bit with options, but honestly, most of what I'm doing with options, I'm either selling some covered calls in some of the positions that I'm long, that I want to keep long, but I'm a little bit nervous about a market pullback or pause. So I think I can just get some cash flow for myself by selling some covered calls. Or I've been involved in some of these UVixi puts that have paid me very well, because UVixi is a product that's actually very hard to short because of borrow costs and everything else. But it's got decay on multiple levels. So strategically buying some UVixi puts, which has been much better than trying to short outright equity in the UVixi ETF, has been better. And they've been paying me UVixi, Bull. I'm sorry, they've been paying me like really, really well. You can see them in my position disclosure, and I rolled over some of the ones that already paid me into some July 24 puts. I had the May ones paid me really well. The June ones that I have open paid me really well. When was I shorting those? I think it was. When was I buying those puts? It was in like the 40s, right? Where was this? Where was this thing when it was like after I first split? Yeah, it was at like these upper 30s, $40, putting on UVixi puts for. What do I have, like $34 puts that expired in May, and I've got $34 puts that when I put them on, they were out of the money, that expire in June, and I took some of that profit and I rolled them into July. That's worked out great. And then the third thing I do it a little bit is for shot taking, to be honest. If I see, usually I'm doing it, I'm taking a shot if I see some unusual option activity, and I just say, that looks interesting and it's cheap. I just want to participate in it and see if, I get an insane risk reward asymmetrically out of it. Which that aspect of it is probably where I've had the least amount of success, to be totally honest, is the shot taking. I've had a few work out pretty well. Well, I've definitely also had some others expire worthless. I had those GameStop. I had those GameStop $24 calls that expired on Friday. That sucked. I had gotten a big enough of a move on this day here on the 28th, where the high of the day was 26.66, that I was able to take some off. So it wasn't like a full loss disaster. But I definitely still had some at the close on Friday that expired worthless, and then the next morning I'm seeing the stock gap up to 40. I had a bunch of those $24 calls, and at one point I had like 4,000 shares of equity, which I stopped myself out of, I think, on that day. And we got that pop up to 26.66, and they sold it back down intraday. I think I stopped myself out at like 22. A few days later. It could have been a really big day, and less frustrating day on Monday if I still had some of those GameStop positions. But whatever, it is what it is. Part of trading. Josh is asking me my thoughts on Meta. So Meta was on my list today. Oh, actually, I didn't write it down on my list, but in the morning meeting I said I like Google and Meta in the mega cap stock land. Meta is this breakaway gap. You could be long versus 480. That worked really well. And Google, I said you could look to be long versus yesterday's high, which didn't work as well. It worked okay off the open if anybody was able to get stock. So yeah, I thought that this chart of Meta started looking a lot better in the second half of May on these retests of 480, but the market was weakening out, so it didn't want to go. I like the Meta idea a lot from today. What's a good entry? It's tough when you gap up that big, to be honest, as I'm looking at the 5-minute chart. So either you got to be willing to just pay up $4 on it, which, it's kind of a maybe. It's kind of a maybe. Or you got to find an intraday setup. And there is no intraday setup in this thing in the beginning of the day as I'm looking at it. I don't like any intraday setup that I can see in this thing at all. So I think that the actual execution of the idea was very difficult unless you're willing to just pay up versus 480 off the open as a kind of momentum trade and
you could have
pay
tried
down.
to pivot low like on the like 10:45. I mean, you would have ultimately got stopped out anyway, but you could have tried like a 10, like that pullback.
Yeah, you could have tried to buy this pullback. It was more of a 15-minute correction, which makes sense for this time of the day. I do like that. I just also don't see like a very clear signal though that 485 is the price.
Right.
Like it could have pulled back another $1 below that just as easily. There's no like clear hammer here, or at least not on the 5-minute, where it just directly hammers back up. And I don't see anything I love on the 15 either for the specifics of the execution. I mean, this is the area where you would want to try it, to Josh's point, technically. But I still think that the actual specifics of the execution was difficult. But yeah, Meta was better today. You're welcome, you Vixie Bull. Yeah. That was tough, Rex. I see that it broke that 10 a.m. low, and I don't think the Qs really ever did. I don't know, Tate. We just want to get you past that and just get you fully on the team. All right, guys. Have a great night, everybody. See you all tomorrow.